All right, so the next thing I want to talk about is service contracts versus employment contracts. Now, this is something that I run into both as an income tax auditor. Yes, I did that many years ago, but I've also ran into it as a comptroller who was also responsible for contracting and procurement, where we were jammed up with situations like this. And what it is companies bring in talent as a contractor instead of as an employee. And that can end badly. And I'm going to show you how that works. So first of all, why would we do this? What's the perceived advantage to the payer? The payer is the person who's paying for the service. Well, we only pay when services are received. Unlike an employee, sometimes you're paying whether you get work that day or not. No overtime, holiday, stat, or sick pay. And now here in British Columbia, sick pay is actually an entitlement built into the code now. It has been in union contracts for a long time, but it's now something that's built into the labor laws here. So that's why I've added that. No termination liability, including severance pay. So if you let the person go because things aren't working out, or they've just done the job and you don't need them anymore, you don't have severance pay to deal with. The pension, unemployment insurance, or work-safe premiums, which we're going to cover in Module 5. So again, you don't have those. These are perceived perceived advantages to the payer. Perceived advantages to the payee. This is the contractor. They may be getting more money. Their hourly rate or their per piece rate may seem like it's higher than if they were an employee. They believe they have tax write-offs. Now, do you remember we talked about tax write-offs earlier? I'll give you an example. When you drive your car from home to work and back as an employee, that's personal. However, many people believe that when they are a contractor, that driving from home to work and back is business. So they want to expense, for tax purposes, their fuel, their insurance, depreciation on their vehicle. Well, the truth is as a business, you're still required to get to and from your place of work. Now, if you get to your place of work and now you've got to go out and do trips here and there, that's different. I'm talking about going from home to the office and back. The other thing could be home office costs. So you have a little office in your house and you believe that 10% of your square footage is your office, therefore 10% of your utilities, 10% of the interest on your mortgage, your insurance, you call those write-offs because you're a business working from home. These are the different perceived write-offs that somebody who's on a contract may feel that they get. And then of course there's the sense of entrepreneurship. So it's a good feeling to be a business owner and make some decisions and steer your own ship is the terminology that I use. So these are perceived advantages to a payee. Now there's some disadvantages to the payee. You're only paid when you provide services. So if there's downtime, you're not getting paid. There's no guaranteed income stream. Okay, being a self-employed individual is not simple. You've got to have the income stream, you got to go out and find it and get it. You must manage your own CPP here in Canada, the Canada Pension Plan, income tax, and your WorkSafe, your workers' compensation premiums. Now, when we get to Module 5 and we cover WorkSafe BC, you'll see that there are cases where the person you're doing the work for, even as a contractor, takes care of that, but not always. So that's something that we have to consider. These are things that we have to look after. A few other things change. You may be subjected to collecting and remitting value-added tax. Again, Module 5, we're going to talk about in Canada the GST and in British Columbia the PST. Well, if you're self-employed and you're calling yourself self-employed, then you may be in a situation where, okay, well now you hit certain thresholds where you're required to register and collect these taxes. You didn't have to do that as an employee. So there are things that change. You may also be required to have liability insurance, which you didn't have to do as an employee, because there's a responsibility from companies to be responsible for their employees' actions. Well, you're self-employed now in this situation, so you may have to have liability insurance. But this can unravel. Regulatory authorities can deem it an employment relationship. Who am I talking about with regulatory authorities? GST people, or sorry, Revenue Canada, CRA, in particular, the Canada Pension Plan, and employment insurance. And of course, income tax remittance. So these are areas where this can get a little bit ugly when they come along and they say, you know what, I don't care what you call this, this is an employment relationship, not a contractual. So why is the government concerned? They like their income tax, they like their pension plan contributions, and employment insurance premiums. But they also don't want you, as the contractor, claiming business expenses when you're not entitled to them. So there's another area. So there's a few entitlements that might change, actually they will change, if the authorities deem this to be employment versus contractual. For one, you may be entitled to employment insurance now, where you weren't before. You might be entitled to overtime, depending on the state of the province, the jurisdiction. If you're deemed an employee, you might now be due some overtime. Statutory holiday pays, sick credits, vacation pay. So if this happens, where it's deemed employment, some things are going to change for both parties. Now, what a ruling typically will not do is make you a permanent employee of the organization. I'm going to use the Government of Canada as an example. If you are a contractor with the government and now you're deemed to be an employee for the purposes of tax and CPP and EI, that does not make you an indeterminate permanent employee of the Government of Canada. Nor does this entitle you to your pension or anything that the union may provide. They're only deeming that you're an employee for the purposes of CPP, EI, and income tax remittance, and income tax deductions, which you don't have now. So how does this happen? Real example for you. You build a house, and you hire a general construction contractor to build your house. Now, that person subcontracts the excavation people, concrete, framing, roofing, electrical, plumbing, drywall. Now, there's others, but I don't want 10 pages of list. You know, cabinets, there's all kinds of things here.
Cabinets, painters.
Exactly.
Yeah.
Exactly. It goes on and on. We're going to pick on the drywaller as where our problem starts. Only because I'm going to pick on the drywaller. And a new one. This happened. Okay. So, legitimately, the drywall company is a subcontractor. He's buying the materials, hiring the employees, hanging the board, taping, mudding, priming, whatever it is that they're contracted to do. That's good. Except when the drywallers' workers each call themselves subcontractors. So the drywall company as a contractor is fine, but in this case, all the individuals that were hanging the board and doing the taping and mudding called themselves subcontractors of the drywaller. And this is where it starts to unravel. So what happened was this one particular drywall worker didn't work out. They were let go. They went to the employment insurance office. They applied for unemployment insurance. They were asked where their record of employment was. They said, I don't have one, I'm a contractor. Well, you don't get EI. Well, I wasn't really a contractor. I was more like an employee. Well, tell us more. And there's a checklist. And the officer sits there and fills it all out. Tick, 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 right, right, tick, right, tick, right. And at the end of the day, they make a phone call to their friend at the tax department and they review it together. And they say, I don't care what you called it, you were an employee. And that's where things go crazy. So what happens there is the individual gets employment insurance. Any expenses that they claimed are now reversed for their own income tax purposes. So they lose, they gain and they lose here. But on the employer side, that's where things get a little bit nasty, because now you owe the CPP, both portions, employee and employer, the EI, both portions, employee and employer, and the federal government, by the way, in Canada does not care about your overtime, etc., or your vacation pay. That's not their problem. They just care about the CPP EI part. What happens though is the drywaller goes to the provincial people, labor board people with that same case, and now they're the ones who are going to work with you to get your overtime and all the rest of it that you might be entitled to. A little bit different. I lived and worked in Mexico for 5 years, and it's a national program. Their employment, everything's national. So it would be one entity you would deal with. But in this case, it would be a provincial and a federal. So what do the authorities consider when they do this? How do they come up with this? You're an employee. Control over the work, including being instructed on what to do and how to do it. Okay, do you have that control? Dictating the working hours, such as providing the services between certain times. Providing the office, the equipment, and the tools. Now, I'm going to stop there for a minute. In the prison system, we had dentists who were contractors, not employees. Yet, we dictated their working hours. Okay, they couldn't come at 2 in the morning to do fillings. We told them it's Monday to Friday, between these certain hours is when you can come here and do this. Providing the office equipment and tools. We actually had a dentist room with a chair and the drills and lights, all the equipment for them. We paid for that. So we provided these things. Yet, they were still okay to be contractors. So don't get hung up on one line. Okay, well it's this and that's the end of it. All right? Let's go further. Integrating the individual into the organization, including inviting them to functions and events. And I've seen that. Christmas parties, luncheons, the contractor, and we're not talking about the plumber who comes one day to fix problem X. We're talking about service contractors who are there a lot or all the time. Okay. How similar tasks are performed within the organization. So I saw this as well in corrections, where there was one institution where the program delivery officers typically throughout the country are employees. They had a couple of contractors delivering the same programs, with the same materials, in the same classrooms, the same hours as the employees. Deemed employees versus contractors. Situation where one cook in an institution, one cook, was called a contractor. All the rest are employees, except the inmates who work with them as laborers. One contractor. Why? Because they were not successful on a competitive selection process to become an employee, but everybody liked them and knew them and worked with them. And their casual hours ran out, because you can still hire them as a casual for certainly 6 months of the year. So they brought them in as a contractor. No, can't do that. How similar tasks are performed within the organization. The length of time or permanence of the relationship. I knew one person who did that same contract for 10 years. If the contract is the sole or main source of the payee's income, we're getting somewhere now. That's the only place this person worked, was this one place. All their money came from them for 10 years. That's permanence and sole or main source. How remuneration is determined, such as piecework versus hourly. The payee hiring and controlling their own employees. Can that person hire their own employees to come and work for them or come and do the job for them? If I have the contract to be your accountant and I have a company, I should be able to have one of my junior accountants come and do the work. I mean, I have to supervise it and I have to sign it off. I'm responsible for it. But if the control is so much that no, you're here 40 hours a week, here's your office, et cetera, and you have to do it, well, then you're starting to get into that employee point. The payee's opportunity for profit and corresponding risk of financial loss. What on earth are we talking about here? That's so big, I'm going to give it its own slide. So what happens is if typically a self-employed person, a business, let's call it a business, will go and buy a building or rent a building, and buy equipment or rent equipment, and buy supplies and materials, and hire marketing people and staff for the production floor, and they will advertise their products for sale and hope that somebody buys from them. Because if not, they're in big trouble. Financial loss. Well, if you don't have any investment, you don't have to buy a building, don't have to buy equipment, you don't have to do anything other than show up and get paid for a given rate for a given project, such as some of these personal service contracts, there really isn't this opportunity for you to lose money. So this is one of the things they look at. But again, what we have to remember is there's no one factor. They don't just say, okay, out of those dozen things I just showed you, you failed this one, you're an employee. It doesn't work that way. They take everything as a whole and they come up with a resolution. Now I've looked at, because Canada, it's a Canadian program, here in Canada, it's CRA that works with this, along with the HR SDC people, which is your CPP and EI. But I've also looked at the state of California, the state of New York, and they have very similar types of things that they look at. So it is fairly consistent, and there may be some differences depending on country and state, but it's all pretty close to the same, at least what I've seen. Okay, so let's do a quick exercise. I want you to look at this situation. This is a true story. I know it well, and also know the outcome. So if you can take a look at that and tell me what you think.